My name is Vanessa Manning. I'm the Transaction Banking EMEA Head at MUFG, and my role is primarily to embed our regional and global capabilities in our EMEA headquartered customers, as well as adding value to our franchise customers as they operate globally. How MUFG approaches innovation is very much customer-led, so maybe if I can expand on that. The first one is a very long-term view of strategic innovation. So for example, some 12 years ago, MUFG invested in 5 dominant banks in Indonesia, in our Danamon franchise, Thailand and Krungsri, Vietnam and VietinBank with the Mekong Delta, and also in Security Bank in Philippines. Now, 10 or 12 years ago, it took that equity, looking ahead, seeing the rise of ASEAN growth corridors, the rise in middle market and wealth as a nation, and a young, mobile, cross-border oriented economy. So that shows to the long-term view and strategic innovation. We complement that with very much a Japanese ethos around client kaizen, so continuous ongoing refinement and enhancements of our customer journey. So we don't believe in giving big bang migration to a customer. It's about continuous refinement, meeting customers' demands on the ground and at headquarters, and making sure that we deliver on a continuous basis. I think the next part, obviously, global businesses require focus on the global regulatory initiatives and SWIFT type initiatives. So of course that informs innovation, but mostly it informs interoperability and efficiency and excellence in execution. So we look to that as an inspiration. And the very last piece, which helps us deliver last mile, very tailored innovative solutions, is around our MUFG Innovation Fund. So we have an innovation company that invests globally in Series A and Series B startups, and we use that to supplement our offers in generative AI solutions, in automation solutions. For example, things like Grab in Singapore, significant investment in that, or in the Philippines in GCash, which is the prevailing mobile wallet in the Philippines market. And we deploy for our clients globally through these innovation vehicles that we embed with our architecture. Well, I think you have to do both. You have to augment the platforms that you have while building extraneously for that. So a good example could be, for example, foreign exchange, where distribution and execution of FX rates and risk are done centrally, but also have to be able to respond to immediate market changes. So it's global standardization for FX rates and risk, but then local execution and flexibility is critical in fast-moving foreign exchange. The same for payments. Well, I hope I've given you some early indication about the way we're organized. So, for example, for foreign exchange, auto FX or payment workflows, for example, we have taken a significant change in the way we approach foreign exchange or cross-currency actions. So instead of looking at it in a vertical, like FX with payments and receivables or FX embedded in trade, we've taken it as a horizontal in the way that our corporate clients, for example, buy. So embedding FX in procure to pay and order to cash means that you're not embedding at a product lens, but you're embedding at a workflow lens. And I think that would represent one of the largest changes both in bank delivery, but also customer expectation. They don't want to set FX across product types, but across workflows, and embed that more efficiently in their ERP or TMS. Well, with the Basel deploying in January 2027 for many of the European and US markets, in fact, Japanese banks had to go early 5 years ago in deploying of Basel III or Basel Endgame. So one of the major things that we noticed, it forced us early to be transparent to our customers about the changing cost of capital and return expectation, which in a very short window made us a little bit more uncompetitive in short duration trade flow. But a cornerstone of Japanese values and culture is transparency and trust over time. So by being very transparent about the pace, timing and cost of capital change, it allows clients to work with us on the basis that they know we add value and are committed to those product lines where the cost will increase over time. And I think that's a lesson learned for many other banks as they deploy that from next year. Many of our competitors and clients might also be surprised to know our ranking as a global debt house. We're number one in global project finance, financing, leading, structuring and distributing complex debt for our customers. Very important in this next generation of AI and data center build, in energy transmission commission or connectivity, and rebuilding Europe's competitiveness, for example. We also own 23% of Morgan Stanley, and we use that platform to deliver globally competitive solutions for our customers. So what I would say is that complementing our global structured debt capacity, helping clients to simplify and optimize their treasury and commercial goals in very challenging markets is something that we will continue to focus and differentiate on.